For you people that don't know me, my name is J Pinkert. I'm with yourtradingroom.com. I'm a trader coach there. Thank you, Keller. Hope that people were able to take advantage of that forecast. So let's get right to it. What's the key factor here? Let me refresh. I want to see the dollar index. Looking at the weekly. Held exactly where it needed to. But here's the reason. Can anyone say going over Niagara Falls in a barrel? Do we have a waterfall decline? Global financial crisis 2? It's on. The interesting part of it is I think that another day like this will stabilize. There were some targets. You guys could see the chart, right? See the close near the low in the S&Ps. Took out the 200-day moving. This was all done in 10 trading days. I think there's potential for 1150 or so. So where we're at right now, another day like this and we're there, 1140, 1150. This whole thing short term could be over by Monday, Tuesday, maybe Friday, unless it's a complete debacle. But obviously this is leading to strength in the U.S. dollar. Huge day. Yesterday, I was doubting my own forecast, the way it closed yesterday, because we had this whole decline in the S&P up until today. If you just look at it, I'm wondering, where's the dollar strength? Where's the dollar strength? And it was almost like a delayed fuse on this. So it had me doubting it because until today, the dollar wasn't really taking advantage of that environment. So I think we'll run into some trouble maybe here, 75, 70 or so. I really think the dollar should be here right now. It's probably eventually going to get there, but there may be, if this is really just starting, there might be some pullbacks into the 75 level to get on board. Everyone kind of clear on, the VIX 2 incognito? Oh, I'm just a man, Archiga. Alright? I'm just another man. Just another guy trying to make an easy buck the toughest way possible in the market. Good for you, buddy. Congratulations to the bears here in the room today. Okay, so this is significant. We're probably going to take these out. The only thing that would change it would be under this low, and then we'll have the washout. But to me, it looks like 78 is going to be a layup. There might be one pause in here. Perhaps the employment number isn't terrible, or we have the sequence of Friday, Monday, Tuesday turn. Look for a turnaround Tuesday. Okay. All right. Well, I think we're most likely heading up this way with perhaps one pause in here between tomorrow and Tuesday, and maybe a slight pullback to 75. But to me, it looks kind of baked in the cake. Especially with monetary policy and the euro. So I'm looking for targets like 135 euro. They really haven't changed, even though we had euro strength last week, and 150. Initially, we need to take out 162 in cable, and then I think we could head towards 57 again, maybe 53. So let's look at the individual pairs now. Okay, here's your close in euro. Oops, Let me refresh the camera. Okay, closing on the low. So as you go to the daily here, looks like this is a target. I think we're going towards the 135 level. You look at the weekly chart that had some bullish potential. It could still go down here, and then maybe we get a turn later. But to me, it looks like definitely these lows are in jeopardy, 138.30. And the only thing that would change the picture in euro would be closing above this week's highs. It's going to take some work for that to happen. Okay, so it looks like the dollar strength persists, and I can make a case for the 135 level probably sometime this month, at the latest Labor Day. Any questions on my take here in euro? Don't chase things. Look for bounces. Be careful. Reduce leverage in this environment. We have the same scenario in the British. I've been showing this weekly chart for months. The wedge that we broke down of, it's tried to close above it. Pretty negative week. So I think we're headed back towards these lows. Probably take them out. 53 is likely. So really, have you really missed this move? You really haven't missed this move. This move you're a little later on, but you haven't really missed this yet either, okay? This has been a pretty difficult trading environment. Can I get some whys in the room for people that are having trouble trading these markets? Because what have you had since, my gosh, going back to April, you've had basically a huge range, right? Going back to April, when the high was there, really not much of a trend. And to me, it almost still looks corrective to me. So I'm not ruling out that we can't trade 135 and then have a big rally in euro. Maybe some type of Fed program sometime this fall. Or maybe he'll even, Bernanke will whisper about something like that at Jackson Hole. I think they're going to be there on the 8th. So a good time for him to pull that rabbit out of the hat, don't you think? But I don't think he'd be able to prevent 135 from happening in this pair. And a retest of these lows at least in cable. But euro definitely is weaker. You know, new lows were confirmed in euro cable. This was another pair. So there's lower levels left here in euro cable. Canada smoked. The last bear market, Canada rallied 900 pips during the flash crash last year. This was about 900 pips. This low was 99.30. 900 pips. So if we have something similar here, you're talking about 102, 103. So there may be a chance, you know, after maybe it'll stall and pull back. I think you have to go with the long side of Canada here now too, at least for a move to above par. Okay, but don't chase anything. It's never worth it. There'll be another bus to come around the station. This intervention took me by surprise. Okay, so this took me a bit by surprise because I thought that this low might be challenged before the intervention. I really don't know what to do with this. I have no idea. When in doubt, out. I'd be looking at pullbacks maybe back to the 78 level. Right here it's in no man's land for me on the end. Swiss are trying everything, aren't they? They have zero interest rates now. and even that wasn't enough to really slow down the momentum of the downside. I was trying to bottom pick that last week when we were here, and I got out before the GDP number, fortunately. Someone was here in the room that had a trend line. I think it was coming in at 78, and that looked extreme to me. So, pretty amazing market. I would guess around the 42 level, 42.50. Right back in here. This support range. 42 to 42.50 may be a decent range to try it. And this was a pretty good break, right? 370 and to wherever the low comes in here. About 370 pips here. So there's probably some more downside before they turn it. Depends on the employment number. I don't trade right before the NFP. Tough to call. We could have a crash if they're bad numbers. I mean, the star performer's been the bonds. I think I showed the TLT to you guys several weeks back, saying that that's why I believe there was a dollar bull market brewing, because you're not going to have a bull market in bonds with the underlying currency being bad, and that's what's going on. So the bond market forecasted this break in stocks and this rally in the dollar for several months. Also, copper did not make a new high. Silver did not make a new high, although gold did. And now that looks a bit vulnerable to me too. Okay. Also, I missed it, Aussie, and I was looking for it too. You know, we had the classic new high for the move in the weekly to shake out all the shorts, and cracked it pretty good this week. So we're probably heading towards a minimum 102 range. Maybe they try and hold 102. Okay. So that's what we have going on here. Kiwi a bit stronger, but under severe pressure too. If there's a chance for anything to make a new high, it might be Kiwi. Because why? Because this was tough to catch because you had a confirmed high on the daily. Okay? You had a confirmed high. So after this dollar rally is over, the commodity currencies most likely will be the ones to own. But, you know, this most likely happens under $1 in Aussie. Yes. And this equity move is not over. I just see 1150, 1160 in the S&Ps as a stopping point for a good rally. So, I mean, we had 60 handles taken out today, Archiga. So, another day like this, we're there. There were some point figure targets at 1140. But really, this speaks to, this is the whole picture here, you know. The S&Ps. Aussie yen might be interesting. So, that's, any questions on any of the pairs that I've covered here? I mean, it's definitely a very dramatic day. And, it's okay not to trade when things are disorderly, because we're not Citicorp, none of us are. Let me ask someone in here, have you guys ever pulled your stops because you said, well, I'm going to watch it a while? Come on, admit it, I've done it. It's called a CIC. It's called a CIC order, cancel if close. So even today I came in the wrong way in Canada, but I had a stop in, or it could have been a hit. Okay? So that's the mortal sin in trading, is pulling your stop. Adjusting it, that's a venial sin, not a mortal sin. It won't kill you. So days like this do happen. They're rare, but they do happen. And this was a much bigger day. We've seen 200 pip moves in euro all the time, right? So it was a much bigger day in equities than it was in FX. So the difference between pros and amateurs are pros know how to lose, so they have money left to be right with and live to trade another day. So you have to ask yourself, where are the stops? Let's go back to euro. We're right here. There's some stops here, right? And there's some big stops here. So I think this is the grand prize here. I think we're headed for the lows. And then we'll be getting close to a buy zone. So if there's any kind of rally back into this zone, 42, it may just straight line, but if there is, you have to sell strength. There are going to be, I don't think there are a lot of sell stops here because this happened pretty quick, but you're going to have buy stops above here, buy stops above here. But I don't see these levels being threatened until we take out these lows and these lows. But it may try and dig in its heels between here and 40.5 and then give us a bounce. 41.04 right here. Okay. So maybe 78.6 back, and you're talking about this advance, right, incognito? So we're 61.8 right here. Okay. Thanks for the fib count. When it comes to cable, you know, there's obvious stop points, right? The 62 pivot is a big one. Then you have stops all the way down here, down here. I still think this is the grand prize for cable. But this is where we start, this pivot right here, 62.24. So you're going to be looking for bounces to take advantage of this too. All right? In Canada, I guess we have stops over this high, this old high 99.11. Think we're going to take them out before it turns bad, so you're going to look to buy some pullbacks in here. Yeah, so we're due for a bounce. So maybe we get a bounce on some good economic news on the NFP. I think they're looking for 80,000 jobs. So if we get a higher number, I just don't think a lot of people are going to want to go home long into this weekend with the kind of week it's had. So my best guess is we don't have a turn in euro until maybe Monday, Tuesday is my best guess for when that bounce begins. I hope that helps. Yen, they cleaned out a ton of stops, right? They got every buy stop here. You have to go back a ways to see where else. So you have a ton of stops over here too. So some people are selling into this intervention. You know, it's possible that it fails. Some interventions fail. I can't trade this right now. There's air pockets in it. But you don't have a lot of sell stops because everyone was washed out down here, right? The only low that held, and I think this was even taken out, was the March low. No, we held the March low by 10 pips. It actually would have been more bullish if it had already taken out this low. My guess is that this round of intervention failed. Central banks are becoming more and more impotent with everything that they're trying to do now. Have you noticed that? So it wouldn't surprise me to see a new low in the U.S. dollar yen. I don't know how much money the BOJ threw at this intervention. But I think that there's a possibility that we still have to take out the longs that right now are going, boy, was that a good stop. They didn't take me out on this collapse, and now things are coming back my way. I don't know. We could still see a 75 handle. That's a possibility. And I do think that we're starting to get close to some type of buy in Swiss. You know, this might be the first 4-hour divergence above 30 if we make a new low here. Still looking ugly on the daily though. So that's about all I have today, guys. Basically the picture was what happened in S&Ps. It's an equity event. It's a liquidity crisis type of event that's happening in Europe. This time it's their turn. We'll see if they come up with some kind of TARP or something like that. I have a few minutes. I could open it up for questions. Go ahead, fire away. Anything? Okay. Well, I call out swing trades at your trading room. I teach people how to trade in classroom settings and tweet my ideas. You're welcome, Ray. And you may want to check it out. They have a proprietary trading program where you go through a series of qualifying to trade firm capital. And there's some very good traders. I'm not as much of a percentage risk per trade as pips, and it depends on the trade. You're welcome, Chris. But usually kind of in the same ballpark as most of you, 0.5% to 1%. Sometimes more, sometimes less. I try and eliminate gold. I think had it for a while. There's a $50 to $100 break coming. Copper's a better short. Anything else? Anything industrial is a better short. Crude. Okay, what's your most valuable currency, guys? You're spending your most valuable currency with me? Yes, that too, incognito. It's got to be the right bank nowadays. So thank you for paying attention. I hope you learned a little something. Some of these forecasts help you out down the road. And I'll see you next week. Don't forget, don't just count your pips, count your blessings. And thank you, Matthias, Adinda, for moderating this and recording this, and say hello to everyone in the FX Street family for me. Thank you, incognito. All right, Matthias. Adios, Toby. You're welcome. Same to you. I'll see you guys.